Audio Jungle.
Born and raised in Omaha, CEO of Berkshire Hathaway, one of the greatest investors of all time, and perhaps one of the richest humans alive to the day. Yes, you're right. मैं बात कर रहा हूँ Warren Edward Buffett की, the one and only Shah Rukh Khan in the world of investing. Though there's no doubt that Mr. Buffett was surrounded by entrepreneurial heads like his father Howard and his grandfather Ernest, but he still had to grind by selling things door to door and saving up so he could start investing. Now, to see what Mr. Buffett's journey from 0 to 100 billion looked like, make sure you stick to the very end of the video as we'll be seeing how the multi-billionaire of the 21st century was like in his early age, what were his early age struggles, at what age did he start grinding, was it really stocks that made him money in the beginning? And if that's true, what were the investing principles which formed the foundation of Buffett's investing career? If you think that Buffett was presented with every leverage on a silver plate, then you're wrong. It was in 1942 when Buffett made his first investment. Against the backdrop of this landmark achievement, there had been quite a lot of things going on in his life. During the early years of his life, Buffett used to get a pack of chewing gums from his grandfather's store and then went on selling them at a profit. But he noticed that he'd have to sell 50 million packs of chewing gum to get somewhere close to making that first million. It was not long before he decided to take his door-to-door selling business to the next level, from chewing gum to selling cans of Coke at a much greater profit. Well, you might be wondering, why sell Coke in particular? Why not Sprite? Why not any other drink? Now, to our surprise, the younger Buffett was well ahead of his age and knew how supply-demand works. He had this habit of collecting bottle caps, and you can guess that it was then that he concluded that it was Coke which was the most famous soda product at the time. Time passed by, and Buffett, who always had a thing for reading books, came across 1,000 ways to make $1,000. And right about that time, Buffett arrived at a conclusion that he can earn his first million by multiplying that 1,000 to itself. Perhaps it was the easier way of getting to that million than selling 50 million chewing gum packs for the rest of his life. The book conveyed many important lessons to Buffett, one of which could also be narrated through the words of the greatest boxer, Muhammad Ali. Even the greatest was once a beginner. Never be afraid to take that first step. After those hard days when he had to sell chewing gum and Coke cans during his door-to-door campaign, he finally amassed $120. Now, before you step aside and start grinning about the amount, we need to consider that keeping inflation in mind, $120 at that time is going to be an equivalent of more than $2,000 today, or some 1 lakh to 1,50,000 rupees, and that too at age 11, which is pretty damn impressive. Buffett got familiar with the idea of compound interest, and why was it termed the eighth wonder of the world? He was determined to get his snowball off and run down the cliff. After going through tougher times, he finally bought his first shares. The company was called Cities Service, and he bought 3 shares for about $114 and some cents to be exact. But Buffett had more problems waiting for him ahead. The shares lost ground to the market, and it resulted in losses. That was all of his own hard-earned money, and now he had nothing to fall back on. That could have been all there was to Buffett's career, right? Nope. This was just the beginning. It was then that Buffett persuaded his sister Dawn's to invest in the stock market. It didn't take long for Cities Service to gain some ground, and finally, Buffett saw a $5 profit on his investments, and he wasted no time in cashing out. He was happy that he made some profit, but only until he discovered that the stock price for Cities Service had surged to over $200. This was the first and perhaps the most important lesson for Buffett. Don't watch the amount you invest too closely, and don't rush when you see those small profits, because these profits could be the foundation for a much larger bonus later on. When his family moved to DC in 1943, Buffett strongly opposed this notion because he didn't like it at all. It was then that he moved back to live in Omaha, and hence this led to his job in a grocery store. From then on, there were multiple swings in his life. After some time in Omaha, he was called back to DC by his father, where he started to sell newspapers. And astonishingly, at the end of the year 1944, he was the owner of $1,000, which, when we assume the increased taxes as well as the inflation rate, will account to more than $14,000 today, or 11 lakh rupees, which again is a significant amount for a 14-year-old. Now, when he turned 16, he was earning more than $140 a month from his newspaper roots. If you're underestimating this, you can put that into perspective that he did it all during his high school years, where unfortunately, most of us today are busy partying and having fun. Buffett's earnings were in full swing, and he was doubling every year. And in 1945, he had some $2,000 in his pocket. In 1945, he made a big move by buying a farm in Nebraska. Well, he was still a teenager. He bought this farm for a whopping $1,200. And to put it mathematically, he had put 60% of his net worth into this farm. He kept on receiving profits from this farm for almost 5 years. And it was in 1950 that he sold this farm for almost double the price. In 1949, Buffett got his hands on The Intelligent Investor by Ben Graham. He had hit the $9,000 mark and was the richest in his friend circle. And the interesting part is that he had built this fortune through selling newspapers. And that's all, not through investing in the stock market. But that was just the mere beginning of a career that would go down later in history books as the greatest investing mind of all time. It was soon enough when Buffett got his hands on the all-time famous book, The Intelligent Investor by Ben Graham. Buffett took his time and came to know that there's a lot more to investing in stocks than what he currently knew. He also explored more about the author, that Ben Graham was a value investor, and how his fund, called the Graham-Newman Fund, had turned the tables by conquering the investing landscape at that time. There were 3 big conclusions that Buffett managed to pull through after reading The Intelligent Investor. Intrinsic value. A stock is much more than a mere ticker symbol, and its intrinsic value is the real value. The biggest player in the game is known as Mr. Market, and there are 2 moods Mr. Market finds itself in: pessimism and optimism. Mr. Market is an unpredictable individual you can expect anything from. And the margin of safety. Every decision in the stock market should be made by keeping this margin of safety in mind. An intelligent investor looks out for stocks that have a safe zone and they are available at a discounted price from the intrinsic value. Buffett was mesmerized after reading this gem of a book by Ben Graham. Something in him clicked, and it seemed as if the puzzle of investing was finally solved for him by this book. This is the time when Buffett started studying business models and companies and got deeper into the stock market. Furthermore, he also understood that for an investor with small capital, smaller companies are of vital importance. This is the reason he started to study things like Moody's Manual, Pink Sheets, and the National Quotation Book, which included details about small companies which could not even make up for the stock market. There's just so much less competition there, and this is exactly the reason why the first million came in faster for Buffett than the remaining millions or even billions. After graduating from Columbia Business School, Buffett wanted to work for his teacher, role model Benjamin Graham, and even offered to work without any money. But due to some unknown reasons, he couldn't land that job and returned to Omaha to work for his father's brokerage firm. But Buffett wasn't comfortable with this job, as he thought that he wasn't getting enough respect from his clients. Embarking on a journey, Buffett arrived in New York, where the Graham-Newman office was situated, and now he was finally going to pursue his dream job. His starting salary was $1,000 per month, and using his skills, he was soon one of the golden boys in the company. He was always making moves with complete dedication towards stocks. But after Graham, Buffett made the killer move of deciding to go his way. The big move came on the 5th of May 1956, when Buffett Associated Limited was formed, which was an investment partnership, more or less like Graham-Newman. It was at age 26 when he had accumulated a sum of $174,000. In the beginning, the partnership was a smaller one, and it primarily consisted of family members and a few close friends. Buffett had put in some $100,000 and the 7 partners had managed to assemble an amount of $105,000 for the company. If there was one most important takeaway for Buffett from his teacher Ben Graham, it would be an investing strategy known as buying cigar butts. And if you're wondering, such stocks were the ones with no zeal whatsoever and were unloved, just like cigarettes smoked and then thrown away with at least a puff or two remaining. To put it into investing language, the cigar butt strategy meant hunting for those cheap stocks, and by that I mean really cheap stocks. These stocks had a low price-to-earnings ratio and were more or less ghosted by all the investors. But Buffett knew that these low prices would correct themselves after a few months, and hence it led to Buffett's famous buy low, sell high strategy. In 1959, Buffett met Charlie Munger at a dinner party. They were like long-lost friends. They went along nicely and were always throwing their intellect at each other. And the rest is history. It was the setting stone for Buffett's company, Berkshire Hathaway, and Munger has been the vice chairman since 1978. By January 1962, Buffett had managed to reach exponential growth. He was an active member of more than 10 partnerships, and as we can expect from Buffett, he managed to combine these partnerships into a single one known as the Buffett Partnership Limited. By the end of 1962, the interest in the partnership for each of the members was somewhere around $7.2 million. And this was how Warren Edward Buffett made his first million. Warren Buffett and his investing wisdom still revolutionize plenty of investing mindsets out there. Do you guys want us to make a separate video on Berkshire Hathaway and the funds it manages? Let us know in the comment section below. Make sure you press the like and subscribe buttons, and until then, we'll see you in the next video. Omega Finance signing out.